Hey guys, my name is James Mason with Transparent Traders. In this video, I'm going to show you how to use the new TTBB entries and exits indicator on TradingView. So this indicator was just released and this thing is an absolute beast. So let's go ahead and get in it and let's just start from the beginning. So for those who are wanting to know how to use this thing, how to get it, you start off with your desktop, click on indicators, go down to invite scripts only, and you'll see it over here on the side, and then click on TTBB entries and exits, and it will load up. Once it loads up onto your desktop, over here on the side of your chart, you'll see it there. Just click on it, and then you can click on that little gear to look at the settings for the length. This is absolutely critical. If you're going to adjust this, you only adjust it to the number 20. Either 10 or 20. Nothing else. For style, you can change the colors of the arrows. I have them white and yellow just so it can be seen easily for this video. Alright. Once you have that all set up, how this works is you just go with the flow of the arrows. So I currently am watching Dogecoin. This is on the 5-second chart, so you can see the price action a lot quicker and the candlestick action with the arrows. Now, if there's a candlestick that's currently open, like this one right here, if an arrow was like flashing in the middle of it, obviously 5 seconds is going to be harder to see this, but if you have like a 5-minute candle and then you're seeing a arrow flashing during the candle before it's closed, that's not confirmation. Confirmation is this: once the candlestick closes and that arrow is there, that's confirmation. So you essentially just be taking that trade off of that direction, that opening of the next candle. And we just saw a second ago how that was working. So when you start to see these entries and then literally the opposite signal right here, that just means that whatever you're trading, whatever you're looking at, is just choppy. And it's just trying to find its direction. So this is why it's critical to go with the flow of this. Now, if you're trading normal shares and if you're under the PDT rule, I don't advise to day trade with this. You need to have enough day trades just so you don't get caught in this, because you could get caught in some choppiness and it does like this. But you need to have trades available or not held to PDT to where you can continue on and just in and out. Now, say if you make a entry short, for instance right here, and then soon after it says go bullish, that means to cut that trade, or vice versa. This will keep your losses small if there is choppiness, and once that direction sticks, it usually runs pretty good, as you can see right here happening in front of you. So that's what we're looking for. That's how we use this. We use it arrow to arrow, and if it signals a different direction, you cut it and go with the flow. As you can see, this works for any time frame and for anything that you can pull up on TradingView. So normal stock, futures, forex, crypto, anything. So we'll look at Apple, and I'll change the time frame, and since the market is closed, obviously, we'll just put it on the daily chart. So how I was saying with like the choppiness, you can see right here it's signaled to go short. So you go short. Now if you were already long, and we'll talk about this here in a second, but if you were long down here and rode this up, if you got an arrow saying to change direction, that means to go ahead and end that trade. But let's talk about this for a second. It says to go short or to sell yourself for profit, whichever it may be, but a bearish signal and then immediately a bullish signal and then bearish then bullish, we have that choppiness. You can see it with this candlesticks right there. And then, you know, one last one right here, but then it pulls back pretty good. This is why you change with the flow of the candlesticks. Now, you would take some losses here, but they're going to be minimized. Because once this takes off in that direction, you usually more than make up for it. So looking right here, we can see how this played out. So it said bullish. You would have literally stopped out pretty quickly. And then it said bearish. You made just a little bit of profit. Nothing really. But right here where it said bullish again, you made entry on this candlestick because, again, remember, when this candlestick was open, if this arrow was flashing, you have to wait for this candlestick to close out to make sure the arrows stick and don't repaint. Now, once that is confirmed, you make entry. So, if we would have made entry right here at the opening of this candlestick at 120.11, we could have rode this thing up for some nice profit, as you can see. And I'll scroll back just a little bit. And you can see right here, same concept. It's going to be like this over and over and over. Now, I ran a strategy, and I posted on Twitter, and out of the span of 3,658 trades, its P&L was break even. But I created that logic for that strategy, that backtesting strategy, in the context of taking it from arrow to arrow, which is not what you would do. The arrows will save you if it's choppy. But if it starts to run and you have a decent profit, just be sure to take your profits, especially when you have a nice run. For instance, right here, open up at 133.80, and if it shot up here to 143.07, you're almost 10 points up. Just take your profit. Nothing wrong with taking profit. That's why we're doing this. But if you decided to just keep holding on, just to receive that opposite arrow, overall in the long run, you're just going to have a break-even P&L. So again, this works for anything you pull up on TradingView. It works for any time frame. If you're going to day trade with it, you need to be over PDT or using some brokerage account that's not influenced by PDT or cash account. For swing trades, I recommend, just in general, just generally trading, I recommend anywhere from 4 hours on up. So 4 hours on up to a week, really, just depending on what you're trying to accomplish. Obviously, the longer time frame that you select for your trade, the longer that trade is going to take to work out, since you're looking at information for a certain time frame. Another thing that I would like to talk about is if you make a decision based off of, example, the 4-hour chart, do not make a decision off of one time frame and then go look at another time frame to try to trade off it there. It's essentially two different types of trades because it's two different calculations. So once you start on one time frame, you will continue on with that time frame, and none of the other time frames will matter. So this is how you use the new TTBB entries and exits indicator for TradingView, and this thing is an absolute beast. It's literally dummy proof. So I hope you guys make some killer money with this thing, and let me know in the comments.